So, today we're going to talk about um, how to identify breakout stocks versus swing trades. Real fast, if someone could write in the chat if they could hear me, that'd be really helpful. Anyone hear me? Okay. Um, so, if you're a close follower of what we're doing in our portfolios, um, you'll know that we started to sort of divide up how the positions are working in the equity portfolio between breakout stocks and swing trades. So um, we're looking for shorter gains in what we call breakout stocks, and we're looking for a bit longer, not like 10 to 20%, but usually 2 to 6% for swing trades. And what I want to show you guys today is kind of how on your own you could look at a stock and decide, okay, could this be a swing trade, could this be a breakout stock, or is this really neither? And what are the key technical sort of things you need, as well as understanding sort of the fundamentals behind each one as well. Um, so what I first want to do though is identify for you the types of technical indicators that I use to do the same thing. And then we can kind of review them quickly since I'm not sure how much each person knows about those, and then we can go from there. Because a review of the technicals is always a good thing to do. So the one I'm working with stockcharts.com. So if anybody, if you want to follow along, you can go to stockcharts.com right now, and it's a great website to use for free. Again, I think I've mentioned this a couple of times. I use some charting software that I have at my hands, but it's not something that everyone has, so it's really not useful to you guys for me to show you how to use it because most of you don't have it. Um, so Michael Kors is the company I wanted to start with today, and there are three. When you're looking at the chart, you're looking at things called overlays, and then you're looking at things called indicators. Overlays are things that lay over the chart, okay, and those are things that you can use to your advantage. And then indicators are things that typically show you momentum or buying patterns. How's the stock performing lately? They typically follow the actual movement of the stock, but they're going to show you key levels that you can watch for that won't be shown on the regular chart. So the first one I like to use is called the CCI. It's called the Commodity Channel Index. And typically it moves in the range of about negative 100 to 100, and then when it gets outside those bands, it's showing fairly overbought or oversold conditions when it's between negative 100 and negative 200. Sometimes it'll go even all the way up to like 300, and I've seen some even go near 400. Um, but typically when you get above 100, you're looking at an overbought condition, and when you get over 0, you're looking at a stock that's showing very good momentum on the buy side. When you get on a movement down below 0, you're looking at a stock that's starting to really show some weakness, and negative 100 is definitely showing an oversold condition. And typically, in my theory, is that over 100 is a lot different than under negative 100. When you're shorting stocks, when you get to negative 100, a lot of that weakness has already been priced in, and it's much easier for a stock really actually to increase in price or stay flat than actually decrease in price. I mean, it's much harder to short a stock than it is to stick with a stock long and make money on it. So that's something to keep in mind when you're looking at CCI. Typically, when I'm looking at shorting stocks, I want to get them in between 0 and negative 100, and then once they get below negative 100, I want to start to look for some profit taking. But I will tell you right now that I'm definitely much better at going long than I am at going short. So, all right, MACD. That's CCI again. 0. Look, it's pretty self-explanatory. Once we break above 0, we've done a webinar on CCI, so that's why I'm kind of just breezing through these. And if you didn't see that, you can check out the website. There's a webinar recording. All right, MACD. Typically, this can go anywhere. you'll see right now 3, 2, 1, 0, -1. Typically this is going to move, yeah, within a range of like 3 and -3. Um, Now the key with the MACD is you have these black and these red lines, okay? And um, what we're looking for on MACD is we're looking for when the black line crosses above the red line, or when MACD is showing a trend, okay? So for example, when the black line crosses over the red line, which you can see happens right here, this is a fairly good sell indicator. And then when the black line crosses above the red line, it's a fairly good buy indicator right here. Okay. Now, one of the things to watch for MACD is what we call like divergences. So a divergence happens when the black line gets much too far away from the red line, and it really doesn't show a true pattern. So, for example, here, you know, right here, you got these two really big candlesticks down on red candlesticks, and that shows you a fairly quick divergence. But you'll notice that overall, without those two red candlesticks, this is a really pretty flat chart. There's not a lot of movement in it, and so the MACD really isn't a really great indicator when you have a really flat chart like this, because it doesn't really show you much, because it's really showing you buying trends and how the money flow is going in and out of the stock. And with, you know, when you have a flat stock, there's really not a lot of flow. I mean, so the MACDs aren't really too great, and you see that like when you see these really big red candlesticks, you see a really huge divergence, which doesn't really show you a clean pattern, because right away after you got those, you bounce right back up. And so what we're looking for in MACD is we're looking for trends that we can buy. And, you know, like for example, right now in Michael Kors, there really isn't much of a trend. It's flat, so MACD really isn't effective. But if we saw a better trend, which we'll look at in a bit, we'll see a better MACD picture, and I can show you guys a little bit more on it. Then slow stochastics is the final thing I like to look at for the indicators. And slow stochastics is really just showing you basically a moving average, and how that moving average is moving up and down. It's just like MACD, black line and red line. When the K line, which is the black line, crosses over the D, really nice buy indicator. When it crosses below, it's a good sell indicator. Now, typically the way I want to use this is I want to look for, if I'm doing a swing trade, I want to look for a slow stochastics that are building between 20 and 50. And if I'm doing a breakout, I want it to be building between 50 and 90. And I could even sometimes buy, I'm sorry, 50 and 80. This is actually an 80 right here. Can't see it's blocked. If it's breaking above 80, I'm still okay with it as a breakout stock, because breakout stocks are all about momentum. So, you know, sometimes your indicators can't show momentum very effectively. For example, like over here, you'll see for almost 2 weeks straight, you saw slow stochastics above 80. And on a lot of charts, you know, when you see stocks going up for a month straight, you'll see slow stochastics above 80 for an entire month straight. So it's an indicator, but you know, you have to also understand that momentum is much stronger than these indicators are. So, but you can use them really well to see these sort of flows. You know, I think they're a much nicer flow and a much nicer way to show buy and sell points. Like here was a great buy point when this black line crossed below this red line, and as it broke above 20, this was a perfect time to buy on the 19th, and then to sell here at the December 1st. You know, the thing about it's not a great gain. It's 50 to 54. I mean, but that's still a 9% gain. Not a bad gain to make on a swing trade that happened over 10 days. You know, so that's kind of what you were looking at when you're looking at slow stochastics. Okay, so I kind of quickly went through those. If you have any question about any of those, go ahead and throw them at me. I don't want to delay too much on looking at the charts, though. The other thing we have is overlays that we can put on the charts. Now, there's a lot of things you can do with overlays, a lot of different ones we can use. And sometimes I look at different ones, but I would say that the most often what I'm going to look at is I'm going to look at the 20-day moving average. Oh, that's 50. Sorry, I want the 20. I want the 52. 20-day, the 50-day moving average, and price channels. And a lot of times I'll also look at pivot points. Those are key. And then Bollinger Bands as well. But for now, we can just use these three because we can get a good enough picture. So let's build the chart and let's add those on. Okay, now we get a much different picture. and now we can start to see a little bit more about what we could use for breakout stocks. So what we can see with price channels is what they do is a really great job of showing us, and you'll see if you look at any of the times you look at the trade tips that I send out at night, or the charts to watch, excuse me, that I send out at night, you'll notice that a lot of times what we're looking at is when we're looking at breakout stocks, we're looking for stocks nearing the top of these price channels. And so that's really one of the key things to see. What we've seen with Michael Kors, though, over the last 3 months is that it really hasn't shown any breakout at all, and it's just moved within its price channels. There's really been very little breakout. There was a breakout here to the downside and then flattened out. But you can see test 1, 2, 3, 4 times we've tested an upper channel, didn't break. Another one here, it actually broke here. So you got a small break there. When you see, you'll know when you get a break because you'll see the price channel go from flat to anything other than flat. So that'll show you that you have a break. So right now we have an upper price channel at 55.15. And so I've seen, like, a lot of people saying, okay, Michael Kors is a breakout candidate at 55 maybe. And so that's a potential situation that could happen, and definitely something to watch for. But right now it's really not. It's not approaching that. It's below a near top right here. And really, I would think, okay, it's not really a breakout stock right now. Could it be a swing trade? So again, like the breakout things I'm looking for is a CCI building close to 100, maybe even breaking 100. And actually, on the upside, when you're breaking 100, that shows a lot of good momentum. I said it's an overbought condition, and it is an overbought condition, but an overbought condition can also be is usually a condition for a breakout, because overbought means you have a ton of momentum moving into the stock. So usually I'm looking for around 80 to 100 to 110 area for the breakout stock. And for a swing trade, I'm looking for 0 to 80. So right now the CCI is in the swing area for me for Kors. So the other thing I want to look at is MACD building. I don't see a really strong build for MACD. And then I also see slow stochastics already at 73, and I want to see them closer to down here. So for me, I wouldn't, I want every single technical indicator to line up to be exactly what I want, because there are 6,000 stocks to trade, and we also don't trade to just trade, we trade to make money. So we want all the things to line up the way we want them. So right now, I don't know, I put Michael Kors just first because I know that we've talked about it a little bit on the site lately, and I've seen it really kind of heating up on some different traders' screens that I know. And I don't see it quite yet setting up for anything. It's been really flat for a really long time, and I think they have earnings coming up close to the beginning of February, and I would guess that it's probably going to just move in this range. So really, actually, what the stock is really good for is for like an iron condor, for a bull put spread, or maybe even a bear call spread. And we actually have a bull put spread on right now at 40 in our Goldman trades that we put back on in December. And so I think actually moving forward, this is a stock that you could look at as a fairly good stock to do bull and put spreads and bear call spreads, because it shows really very little volatility. All right, now I've got some other ones. Let's look at IBM. Okay, IBM is one that could be potentially looking at for a breakout in the near future here at 196.45. So you've got the price channel there at 196.45. Okay, the CCI is at 55 right now. When it gets to 196, I think we can expect it to be right around breaking over 100. We saw it last time it was there. It was around 100. Last time it was at 55. It was right around the same area as it is now. So I think we could see the CCI moving to about 100. The MACD is flat, but that black line will have moved above the red line if it does move to that. And the slow stochastics are reversing with the black line crossing over the red line. So really, things are setting up quite nicely the way I'd like to see them. You've got it above the 20-day and the 50-day moving average. That's another really good sign I haven't talked about, sorry. So one of the things I wouldn't want to see on this is I wouldn't want to see the 50-day moving average above it or the 20-day moving average above it. I want to buy stocks that are both above both those moving average, or going to break above them. So this is a potential breakout candidate. It's only about 1.6 or 7% below that line right now, so not much movement, that's why it's not a really good swing candidate, because we're going to be right to that pretty strong resistance line, about 1.5%. So it's not really something I want to do for a swing. So it's definitely a potential breakout candidate, and it's definitely something we should watch for next week. It's not a huge mover, IBM, I know that, but at the same time, any stock that sets up the way you want for a breakout, you can buy and ask for a breakout, because you're going to see money flowing into it, because everyone's looking at the same sort of setups. Another good one is AEGR. And I can't even pronounce the name of it. Algerian Pharmaceuticals. I don't really know too much about the company. I do know about the chart, and so this is one that I was watching throughout the last week. Is they touch the price channel up or down an action indicator in and of itself? Good question, Howard. So you're going to see the stock move to the price channel. Typically what I do is I set my actual setup where I want to actually buy it about 5 cents above it, the line, because I want to see the action actually move through the line. But what we're gonna talk about is called failed breakouts, and actually Algerian is a pretty good indicator of that, and that it's it's why it doesn't work all the time, and it's why you really want the perfect setup. So for example, here with Algerian, here's one I was watching, and it did actually touch the top price channel, and it actually even broke through it. The high of the day on Friday was 28.23. The price channel was at 28.04, so it broke well above the price channel. I think the level we were watching was 28.11. I'm almost certain. So I was looking for a 7 cents above that level, and I think that the key. I think there's a pivot point. Let's look at that. If I remember correctly, there's a pivot point. Yes, there it is. All right, so that's crazy that I remember that. Okay, so there was an R1 pivot point at 28.11. Yep. So I was looking for the break above 28.11. It did break above. It broke above each, and this was a failed breakout. Now the thing was we didn't buy it on Friday because we'd already gotten into a couple stocks, so we canceled all our. Once we get into a couple, we don't want to overtrade, so we canceled the rest of the setups for the day. And for this one, this was for us it was nice because it was a failed breakout. So it broke above that level, the price channel, broke above that pivot point, but didn't continue higher. Now, could it continue higher on moving into next week? Sure. It's got a really strong momentum. You see CCI is just creeping over 100. It's at 121, but it is trending up. You've got the slow stochastics. They're trending up right now, and the MACD. But if I look at this chart again, I do see sort of some things that I don't like now that I look at it again. For example, like MACD was, when I was looking at it for the first time, was actually consolidating, not moving, trending up. And the slow stochastics had just been coming down, and they were already fairly high. They weren't trending up. So those are two things, maybe reasons why, they're not reasons why. I mean, the reason why is because you didn't get enough people to buy at that level. But when we're looking for those perfect setups, this one wasn't one. And so that was a failure on my part. But it's also a reason why we see that failure at that level. Okay, let's look at another one here. BKD, which is one we actually did get into. So BKD did set up on Friday for us, and it hasn't really moved at all yet. We got in at like 26.10, I think 26.11, something like that. It's at 26.05. So this one, you saw a really, really strong price channel for a fairly long period of time, which is something that's a good thing to see because that means it's a really strong resistance line. And that means that it is going to be a very effective break. With this last one, you see, it kind of had broken out and it's flattened. Now it's testing again, but it had just broken out from 20 to 27. So I mean, with this one, you've seen a really long-term channel that's been developed since October, basically. Without, besides this little test right here, it's been between 24 and 26 for a very long time. So we see CCI building, breaking above 100. MACD building, it's still pretty tight, but you can see that black line's crossed over the red line, and it's showing a little bit of a movement. And then the slow stochastics at the same time are building as well. So I like this chart a lot, and right now it's broken. It's all resistance at the first pivot point, but once it can break above that area, I think it's very likely to go up to about 27.16. So this one's a good setup. I like this one a lot. Hasn't broken out quite yet, and sort of teased with us on Friday and didn't quite make it, but also didn't break down as well, which is a good thing to see. Okay, I wanted to identify. I was looking at charts for like the last hour. There's just not a lot of good setups right now, and that's really kind of what's making this challenging. But we did have a footlocker. This one I did like for a swing, um, and it's between us. It's not a breakout candidate because there's not really a level it's breaking out from, but it does have sort of a mixture of the swing and breakout stuff that I was talking about. It's like CC. What you'll see in this one is everything's really clean, breaking out to the upside, and this is what I like when I'm looking for a swing trade. Is everything's just starting to cleanly break out, and we identified it 2 days ago, so it was back here when we started to identify it. MACD was right here, and this one was right here, and the level I was looking at was 3360. So you see CCI, it's a really nice build. MACD, black line crossed the red, building nicely, so stochastic's building. And then 3360 was just a level that I identified, and I'm not quite certain why I identified that level, so I'm trying to remember why. Let's look at the simple moving average. Yeah, that was why. Okay, simple moving average, 50-day moving average was at 33.59, so I'm looking for a break of that. And you can see that the high of the day was 33.59 on Friday. So literally went right to the 50-day moving average, touched it, couldn't break it, and therefore we didn't enter the stock because I was looking to get in, I think, at like 33.63 or something like that. So this one's a nice setup because everything's bottoming right here. I don't know if you remember what happened, but Finish Line had these really bad earnings earlier, and it sort of really crushed the stock for a little while since they're very connected. But then a lot of analysts came out, said Foot Locker wasn't seeing the same type of channel checks that they saw with Finish Line. It had a much stronger, and so the stock sort of has bottomed since those reports started to come out, and now it's building back up. And this had been a really strong stock through all of 2012, if we go back. It had been a very good stock throughout 2012, and then sort of it consolidated once we got this fiscal cliff and bearish market that we had for the last couple months. Consolidated here, and now it's sort of flattening out. But you see, I really like this 50-day moving average break because it's kind of really been sitting below it for a while. And you can see this on this long-term chart. It's just right there. It's just building this nice bottom, and then we're looking for it to just break right there. That'll be a really nice swing. And the reason why I don't call it really a breakout stock is because it's not really breaking out from anything. Sure, it's breaking the 50-day moving average, but it's not breaking out of any channels, and it's really building within a channel, and that's really what more of a swing is. Like kind of building off a bottom, and you're looking for sort of a bottom trade. I don't like to commit exactly to like buying at a bottom. I think most of you, if you've ever asked me questions like, "Is this a bottom?" I don't think that people are good at identifying bottoms. I think they're very hard to identify. I think that there are things you can look for, like what I said was when the black line crosses the red line on these two charts, on Slow and MACD, and also when CCI breaks above 0. But other than that, it's really hard to identify an exact bottom. So I look for actually the build to start to occur, for it to happen, and just to show that it is happening, and then to look for a key level that we can buy at. So for Foot Locker, it's showing me everything I like, and then I just need it to break above the 50-day moving average, and I would definitely buy this on a swing pattern. And then we also did a bull put spread on it as well, below, I think it was 31. As you see, 31 has been really, really strong support. Here, 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 and even going all the way back here. Okay, so there's a good swing candidate for you. Now, let's flip the page and let's say, well, what about if I want to short something? So Phillips 66 is one I've been watching for a breakdown. Whoa, I want to get rid of this for the chart. So here we got one that I think is a definite breakout candidate to the downside. Phillips 66, if you know, is the ConocoPhillips sort of broke themselves back apart, and Phillips 66 is the refining part of ConocoPhillips. This IPO'd not too long ago, and I think actually played it a couple times on the upside, and it's been a really strong chart for a very long time. So that's one of the things that I was a little weary of with this, but what you've noticed if you look here, this blue line here, this is the 50-day moving average. Okay, and this has been really, really strong for a very long time. You saw a little test here and here below it. And if we go back in time, here, 6 months, really has never broken a 50-day moving average. This has been extremely strong support. Even for a long time, it was the 20-day, but here started to show that it wasn't quite strong, and then once again, here. So we've broken below the 20-day moving average. We got the 50-day moving average and the price channel converging at the same point in time. The 50 days at 50.58, and the price channel is at 50.40. So they're in about 18 cents range with each other. It hasn't broken really a down price channel. It broke right here, and that's the only time we've seen a price channel break to the downside. So there was another time when it tested, but it never really quite made it cleanly through the 50-day moving average, or closed below the 50-day moving average. So once again, here it didn't cleanly close below the 50-day moving average. But this one's setting up very nicely for a short. Okay, you got the CCI breaking below negative 100 now. You know, that's becoming pretty oversold. But it can make it a pretty strong move to below negative 100. But I also like that I'm seeing the MACD showing a really strong, nice trend down. There is it is a fairly strong divergence. So that's something to be careful with. And then the slow stochastics are also really low too. You know, so it's not a perfect chart for me because I don't see the CCI breaking below like 0 and building to negative 100. And this is a little bit too strong on divergence, and it's slow stochastic. So something to watch. I think it could break down significantly if we get a weak market, but I don't know if we don't get a weak market, it will have that strong breakdown. So it's something to watch, something to be keeping on the radar. It's tough call here. Okay, and if it's a tough call, if you're not sure of it, then that's pretty much that's what you want us to say. Well, if I'm not sure of it, then I don't want to trade it. So okay, ADI, here is one that looks fairly good for a short swing. Okay, what we've got here is we've got the CCI just above 0, but definitely in a downward movement. You've got the 20-day moving average here at support at 42.12. We're at 42.26 right now. MACD, black line just broke below the red, showing a nice trend down, and slow stochastics are on the way down. They have flattened a little bit here, but they still are in a downward movement, and they're just breaking below 50. So I like everything here to setting up for a breakdown, and I think if you can break below the 20-day moving average, which you can see has been fairly nice support since the beginning of December, you're looking for a nice swing, and I would say it will move down to test around 41. So that's ADI, and that's a good swing short setup that I found. STI, let's look at this one. Here's another one that I was looking at. Same thing. This one's, I think, even more so just starting to... So this one showed a 28 bottom here. It broke through the 20-day, but it didn't break through 28 very well. And you can see it's had... The 50-day is at 27.44. But the CCI is just breaking below 0. The MACD black line is just crossing over the red. Slow stochastics are just starting to build to the downside. So this is definitely another one. The only thing with STI, I mean, this is the chart, but then so you got to understand the fundamental picture of everything you're doing as well. And that's why, like, before I'll do anything, I always want to look at what's going on with the stock. And STI, I'm pretty sure, has earnings coming up, I think, sometime next week. So not one we probably want to deal with, but okay, I'll show MJN. But has earnings next week, so it's not something maybe we'll want to play with. So, you know, the charts are great and everything. Like, it's obviously like a great way to trade, but at the same time, if we don't have the correct fundamental picture, then we're not going to be doing anything as well. So that's something to keep in mind as well. Okay, let's look at MJN. This is Mead Johnson Nutrition. Yeah, okay, for the longest time we were looking at this one as a breakout to the downside, because you can see that it had this price channel right here at 65. Okay, and then really the only reason it really popped was because the fiscal cliff was averted. So literally anything, every single short in the entire world didn't work anymore once that happened. And it broke above the 20 and the 50-day, and then, you know, we went through, you could see this huge trend up, and now it's fine. I mean, my opinion of it right now is it's really mixed. I mean, you got MACD high, but it's pretty far divergent. Slow stochastics are moving down. CCI's just moved down, but it's still in a strong, it's in a bullish area. The chart's going to just flatten out probably right now. We were looking for it to break 65, and it did break finally below 65, just barely. And I think we got into it, and I think then we got stopped out on the next day. So, that was kind of just, we got into it, which set up short. Fundamentally, we're really long going into fiscal cliff. So we needed some shorts to have just in case it didn't happen. And so that was a short candidate. The CCI was here at negative 100. It was just breaking down below negative 100. Back here, MACD was pretty flat. So stochastics were flat. So it wasn't the perfect candidate, maybe not looking at it again, but definitely that 65 line had been really, really strong. And we definitely wanted to short on a break of that. And it really did show some fairly strong downward movement below 65. It's just, and it was going to move down farther. You can see right here. But then the fiscal cliff was averted. So kind of changed that entire scenario. And so there's a good indicator of understanding the fundamentals. That was a great chart, but the fundamentals were everything was going to go up, so nothing short was going to work. Okay. So that is, I feel like we've gotten to a good place where we're seeing, okay, what can we see? How can we look at for the swing, and how can we look for the breakout? I would never trade this one, but you're right, Abe. There's another one that's a fairly interesting looking breakout stock. You've got the CCI just about to break over 80. Really, really strong price channel here at 146. MACD has reconverged, but still is trending up, which is something I like to see. And the stochastics are building back up again. So fairly good. Everything looks good for a breakout. And then 146 is a key level. Again, it's a penny stock though, so I'm not even. I just was looking for charts to show you guys, to show you what you want to see for the breakout. So going through some of the favorites, I mean, that's what I did first, and it really didn't see much. Amazon, we were identifying a breakout here at 260, about 264, and then it gapped up above it, so it sort of changed it. Now there's another one at 269.72, I think that is, but it's not. It's just converging below that. CCI is already pretty high. So stochastics are flat now, so it's not something I really like. I don't like to buy a breakout stock after I've already seen these sort of mountains because it's really, I think the move's already happened. I mean, the move's already happened. So let's look at Apple. It's a real Apple. Don't buy Apple until it breaks the 50-day moving average. It's my advice. The CCI is really flat. It's right at 0. MACD, you can see, is just flat. Slow stochastics, they were down. Now they moved up. Now they're moving back down. But they're getting too close. They're getting close to back where Apple usually gets support around 20. So it's got a really nice price channel bottom at 501. So that's a good buy point if you're looking to buy long term. And then again, 50-day moving average. Until it breaks that, it's not going to have any good cash flow into it. So, any questions? What do you guys? What kinds of charts would you guys like me to look at? Got lots of time left over, so we can look at a lot of charts. Any charts at all? You have me here. I got time to kill. MTB. All right, MT Bank. Let's see. I think we got into this one about 101.35. I want to say. Yeah. So I mean, MTB is a nice example of a stock that broke out. I mean, it was here, and there was a really nice price channel below 102. I think it was like 101.35 is like the level we were looking at. It broke out here. We got into it, and it's trended up nicely since. So that was a good example here. CCI was building really nicely, but above 0. MACD was just starting to build, and slow stochastics were just starting to build. So everything was looking very nicely the sort of beginnings of what I like to see, and then there was this nice price channel showing me a breakout area, and it's broken out, and we got a hit our first target. Um, is it going to continue to build? I think actually right now it's showing a nice MACD is showing nicely. CCI is very bullish right now. It's overbought, and then I think they have earnings next week. So I mean, I think we're gonna have to definitely sell it before that happens. But this was a nice breakout candidate. We made I think about 2% on it. So that's what we're looking for: 2 to 3% on a first target, and maybe 4 to 5% on a second target if we can get the really nice breakout like we got on. Triple D, we got a really nice breakout here on this one. Yeah, we bought it right here when it broke on this channel, and then it just took off. It's great. So that one we got both targets. All right, other charts you guys want to see? Anything at all? Or any questions you guys have? Any questions at all? Anyone that maybe joined a little late and doesn't quite know what we're talking? BAC. All right, Bank of America. Okay. Yeah, Bank of America, man, it was looking really good for a while, and now it's not. The thing to keep in mind with a lot of stuff right now is we've got a lot of earnings coming up, so we got to keep in mind our trading patterns are going to be, or any trades we're going to make, we really need to be wary of when is the earnings date, because we don't want to trade into those unless that's our strategy. But for breakouts and swings, that's not our strategy. Right now, if I didn't know the earnings were coming up for Bank of America, I'd say, okay, this is setting up fairly nicely for a swing short. You got 1143, that's nice support there. That's also the midpoint of the price channel, which is actually a fairly nice indicator as well that I didn't talk about, but it's definitely something to look at as well. That's another little support line there. CCI breaking down, still above 0, so still bullish, but if it breaks 1143, it's going to break 0. MACD, black line crossed below the red line, that's trending down, and stochastic trending down. So everything would say to me this is definitely a potential short candidate below 1143, but at the same time, got earnings next week, so really can't do much with it. But it is a good chart, and it is a good setup power, so that's a nice identification for you. One I do like, the one that I really like for earnings is I think the JP Morgan is going to have really good earnings. But the chart is just, we can't trade the chart. I mean, high for way too long. MACD, it's it's building. Sure, it looks good, but it's been building for a really long time. And also, stochastics have been above 80. So here's one example when you're seeing like nothing really. This is a hard chart to trade. I mean, because you got stochastics above 80 since December. MACD with this really strong divergence here, and then once again doing that again. And CCI just always above 100. I mean, this isn't a really hard chart to say, okay, it's going to break out, or it's going to, a swing or something like that. This is just pure momentum, just buying, buy. So, anything else? Any other charts you guys want to see? SLV. Okay, just going to clarify that I'm literally the worst commodities, gold and silver trader ever. So, but as far as the chart goes, let's take a look. All right, we got really good support at 2861 in the price channel. MACD, black line crossing the red, just starting to creep up. Stochastic's creeping up. CCI is creeping up as well. I think if this could break above the 20-day moving average, I mean, it's been pretty nice resistance here, here, and here. I think that it could be technically it's not bad. The thing with gold and silver, it's so connected to different things in the chart, though. It's connected to currencies. It's connected to, it used to be connected to sort of, is this week, is it going to be the safe haven trade, or is this week is just going to follow the market? And so knowing where does it stand in that, and really anymore, it's not really even a safe haven play. It's really just simply a currency yield sort of trade. So silver, though, is different, a little different than gold in that silver has a lot more use in, kind of like everyday life, for building things than gold does. In Europe, they use silver a lot for a lot of different industrial goods, and they don't do that with gold. So that's why gold is kind of like the commodity that has no affiliation with anything outside of it, although it really it's just become honestly a barometer for the market. Um, so silver, I don't know, I like it above 2986. I think it looks fairly decent above that. So I don't know what your opinion was, Richard, but I think if you're looking for a long, I think if it breaks above the 20-day moving average, you could feel confident buying it as for a technical setup as far as that. But again, fundamentally, I'm not really sure. All right, serious. Yeah, I really like this company right now. I think it's going to do really well. Technically, I know we bought calls in it back here when it broke above 3. Um, and it's continued to build nicely. And right now, like this is what I'm seeing with a lot of charts. They're like the CCI is above 100, MACD is really strong, stochastics are above 80. You know, for this one, yeah, do I think it's going to continue up? Sure, but I'm looking for the nice entry, um, and I haven't seen it yet, so I'm still waiting for that. I would really like to be in this stock, but I think that right now it's overbought, and I want to see. I think it's going to probably pull back. I would imagine we'll see it pull back to around the 20-day moving average at some point in the next couple weeks. So that's my opinion on Sirius, and and that's again like I want to find that perfect chart. I don't want to trade. I like Sirius, and it's on my radar, so I'm gonna wait for that perfect timing for it though. And that's really how I like to do it. And then we even talked about that like last week. We were talking about the top investment strategies for 2013, and I was telling you guys like we've got a lot of time if we want to trade this, if we want to buy this and hold this throughout 2013. Let's get a nice entry on it. We don't need to rush into things when we want to find those nice entry points. So like BMC was one that we bought I think this past week for extended value, and it's just done amazing since. And it was at a really good buy point. Like we were at I think 41.45 is where we identified getting in. And you saw like nice setups for everything. The MACD was just started. The black line was crossing over the red line. It was breaking above 0. It was setting up as a perfect swing trade. And we even identified it. I think on the charts to watch, on the swing part of the charts to watch, I had BMC for a very long time at 41.45. Signal for you guys because I saw this. Started to trend up here. Was about to come and break above 0. MACD was the black line was just going above the red line, and the stochastics were building between 20 and 50. So everything was setting up just the way I wanted, and then broke above the 20-day moving average. Sorry, it didn't break above the 20. It got support here at the 20, 50-day moving average, and then once it broke 41.45, that was the level I was looking at because I had been previous resistance here. We got into it, and it's just really nice since it's trended up. And I have a price target, I think, of, I want to say like 55 on this stock right now, so still has a lot of room to go. So, okay, any other charts? Anything else? Don't know if you guys saw, but yesterday we, I'll just give a little promo for the website. Yesterday I wrote an article about Google. We did a 2013 update, a price target update, and we raised our price target to, we were at 690, and we raised our price target to 700. And it's actually a pretty interesting article. Did a lot of research on it. I spent about 3 hours on the article yesterday. So what I'm seeing with Google, and this is this is definitely a different conversation, but I thought we got some time here. You guys have me, so why not talk about it a little bit. I know a lot of people like Google. I think Google is a great company. I think it should be a core holding if you have a technology sort of aspect of your portfolio, long term. But as far as right now, I think that it's pretty fair valued. I think I have an upwards. I think it's good up to 775. So I think it could go as high as 775 this year, and then. But I don't. I think the fair it's about 690, and the reason that is, I'm sorry, 700. The reason of that I think that is because if you look at Google on the fundamental side of it, the return on assets and the return on invested capital, return on equity, have all been declining every year since 2005, and which is not a very good indicator at all. Because what that means is, if you look at like return on assets, okay, you're taking the profits and you're just dividing it by your assets. And so as your assets build or your profits decline, then return on assets decrease. Well, with Google, obviously their profits aren't declining. They're continuing to increase. So that must mean that their assets are growing out faster than their profits. And if you look at what Google's done since 2005, really, at 2005, that was like, okay, they're the #1 search engine in the world. They are the dominant force. But since then, what's come about has been Facebook, LinkedIn, like Twitter, and different types of other sort of social media, and then also the move to mobile. Okay, and so for Google, they have had to do a lot of things, basically add a lot of assets defensively to keep the same amount of profit increase, if that makes sense to you guys. So like increasing, like what have they done? They went out and bought Motorola. They went out and they've acquired a ton of small tech companies to sort of compete on the mobile scale, and they've introduced Google Plus to sort of combat with Facebook. They offered Google Offers to combat with Groupon. So all these things they've done, and they've added on, and that's increased their assets, and they haven't been able to increase their profit to match those increase in assets, which means that some of those assets aren't very profitable, and that's what I talked about in the article. Google Plus, not a profitable venture for them at all. Google Offers, Motorola acquisition has not been profitable at all for them. So right now, I don't see a lot of upside in Google until they can take those things that they've invested so much money into and make them sort of match the same profits that they've had. And really, at the end, the idea is that really Google has a really strong economic moat on the search market on the desktop, but they don't on the mobile side of things, and they don't have other types of things that are showing growth right now, like social networks. So that's why I don't see a ton of upside for Google in this year. So just a little promo. I mean, I guess you don't even need to read the article now, but if you're interested in Google and maybe it's a holding or maybe it's something to think about buying, I definitely would check that article out. All right. Well, if you guys don't have any other charts, I think we'll end here. Unless anyone else has another chart that we look at, otherwise, that's pretty much it for today. All right. So I will see you guys on Monday. Actually, I guess I'll tell you guys this now before everyone pops out. I've been working on. I know we talked about this last year a couple times. Sort of like a weekend newsletter sort of thing where it would come out and it would have maybe some articles in it, some other stuff. And actually, we're actually gonna release one of those today. So look for that to come out to you guys. And for people that are active on the website, it might not be as cool because it's going to include articles that would already be on the website. But actually, the part that might be interesting to you guys, we're going to do a portfolio breakdown for each portfolio, and sort of show you like how are the positions doing, what are the results looking like right now, how are the positions doing inside of that portfolio, and kind of talk a little bit about what's going on in that portfolio. Just a little summation of it. So if you follow like a certain portfolio, you can check that out, and that might be a nice little thing to look at. But anyways, that'll be coming out to you guys today, hopefully sometime this evening, if everything goes according to plan. So look for that, and I will see you guys on Monday.